Hey everyone, welcome back to Corporate Decoder. Today, SS&C Technologies Holdings Incorporated just filed an 8K, and we are digging into what this means for their recent financial performance. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced its financial results for the quarter ending the 30th of June 2026, and we have the details right here. This is a standard current report that companies file when there is something significant happening. Think of it as a heads up for investors about important events. SS&C Technologies Holdings Incorporated, also known by its stock ticker SSNC, is a big player in the technology and software space, specifically in application software. They have a substantial market cap and a good number of employees. Their common stock is traded on the Nasdaq under the ticker symbol SSN. This report is officially filed, meaning it is publicly available for everyone to see. This section is where we get to the heart of the matter. Companies use this to announce important financial news. So, on the 23rd of July 2026, SS&C Technologies Holdings released their financial results for the second quarter of 2026. This is key because it tells us how the company is doing financially right now. We're not just getting a press release, we're getting the official numbers that shape investor decisions. The filing mentions that the full press release and an earnings presentation are being furnished as part of this report. This means they're giving us the official documents that contain all the juicy numbers and the company's narrative around those numbers. The earnings presentation is often where you find the graphs and charts that make the financial story easier to digest. They usually break down revenue, profits, and other important metrics in a more visual way. Now, unfortunately, this specific 8K filing is very brief. It essentially tells us that results were announced and points us to attached exhibits for the actual details. It's like getting an invitation to a party but not yet seeing the menu. However, based on general knowledge of SNC and typical quarterly reports, we can infer what kind of information would be in those exhibits and what we should be looking for when a company like SSN releases its quarterly earnings. Investors are looking for growth in revenue, profitability, and how effectively they are managing their expenses. We would typically see figures for total revenue, cost of revenue, operating income, net income, and earnings per S-share, or EPs. You'd likely see a number for total revenue for the quarter. If that number is higher than the same quarter last year, that is a good sign showing the company is selling more products or services. For example, if their revenue increased by 10%, that's solid growth. If it decreased, say by 5%, that often means they are losing ground to competitors or facing a tougher market. Then you look at net income, which is the profit after all expenses are paid. A growing net income is what shareholders really want to see. If net income is up, it means SS&C is not only selling more, but also keeping more of that money as profit. If net income is down, even if revenue is up, it could signal rising costs or inefficiencies. A significant drop in net income, even with stable revenue, might suggest problems with managing operations or increased competition driving down prices. Earnings per S-share or EPs is another crucial metric. It's the portion of a company's profit allocated to each outstanding share of common stock. A rising EPs usually means the company is becoming more profitable on a per-share basis, which can drive up the stock price. We also want to see how they manage their costs. Are their operating expenses increasing faster than their revenue? If so, that could squeeze profit margins. This is where a deep dive into the actual exhibits would be critical. You'd look for trends in things like sales and marketing costs, research and development, and general and administrative expenses. Are these costs growing at a reasonable pace, or are they ballooning out of control? Think about it like this. If SS&C is selling more software, that is great. But if the cost to develop that software or the cost to market it goes up even faster, then the company isn't actually making much more money, or could even be losing money on those sales. It's why looking at both the top line, which is revenue, and the bottom line, which is profit, is so important in the context of SS&C as a software and technology company. Investor focus would also be on recurring revenue models like subscriptions, as these provide more predictable income. We would be looking to see if their recurring revenue stream is growing consistently. A company that relies heavily on one-time sales can have very spiky earnings, making it harder to plan and invest for the future. The news headlines from the 23rd of July are interestingly all about baseball shortstops and a car model. This might seem like a distraction, but sometimes unusual headlines around a stock filing can signal broader market noise or misplaced investor attention. We need to focus on the financial substance within the actual earnings report. Looking at the top institutional holders like BlackRock, FMR, and Vanguard, it is clear that large, sophisticated investors are watching SSNC closely. Their continued investment suggests a level of confidence in the company's long-term prospects. But they will be scrutinizing these quarterly results very carefully for any signs of weakness. These institutions typically have teams of analysts who will dissect every number. So while this 8K doesn't give us the raw numbers, it's the official signal that SSNC has reported its financial health for the second quarter of 2026. The key takeaways from the attached press release and presentation would be the trends in revenue and profit growth, the efficiency of their operations, and the overall trajectory of their business. For me, the biggest concern with a report like this, which points to exhibits for details, is always that the company might be trying to bury bad news in less accessible documents. However, with major institutional holders, it is more likely just a procedural filing. What I am actually looking for in the exhibits are the year-over-year percentage changes in key metrics like revenue and net income, and whether those show consistent growth or a slowdown. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.